Well, good morning, everyone. Thomas Montgomery, IIMFL, and Smart Money Alliance. It is a snowy but beautiful Monday morning, January 11th, 2021. We don't wake up to many days of snow here in East Texas, but we have it today, which is just fine with me. Today, we're going to have a special topic that blends between the two different campaigns. So remember, we get together around 8 o'clock Central, Mondays through Fridays, or most Mondays through Fridays, and talk with our distribution partners. We have affiliates, credit literacy educators, joint venture incubator partners. Separate from that, though, specifically, we have really two primary campaigns that we're running. One of which is around access to capital. That's our grant subsidized program to help small businesses access at least $100,000 guaranteed, regardless of minimum credit scores, regardless of time in business. No upfront cost. And then you as a distribution partner, you're paid based upon their capital raise and some other perks. So that's great for them and very lucrative for you. And then we have the Credit Boost program that is often used by clients that are in the access to capital if they need a credit boost, but also it's available to the public at large. Today's topic is a rare topic that blends the two because it both provides access to capital to a specific targeted audience, and it also boosts credit score. So let's go ahead and go through it. Hopefully the screen is sharing and you see the page, which is entitled New Startup Financing Program. Now, the truth is you don't have to be a new startup business to qualify. That's really the target audience. Those entrepreneurs who just get started, their business isn't cash flowing yet. However, this trade line can be used by the general public as well, but our target audience would be early stage businesses, especially those that are not cash flow financing yet. All right, so what it does is it provides unrestricted funding. So in other words, it doesn't have to be committed to a certain use. It doesn't have to be allocated for specifically salaries or for marketing or what have you. It's unrestricted. It is an installment loan, and it does report on credit, which is great because what we're doing with Credit Boost is helping people improve their credit profile. And so thumbs up on that. And again, it can be used for working capital. Some of the small businesses that we work with, their business bank account has such a small balance in it that they don't look credible. Frankly, it makes them look insolvent. So this is a resource that we'll be recommending to those, even if they've not started cash flowing yet. Because think about it from this perspective. Let's pretend that all of us are on the underwriting committee of the bank or the lender, and an applicant comes in and says, I want a business loan for my new business. And so we're going to do some due diligence, right, and looking at what the risk is. So one of the things that you and I and our committee would do is we would look at the current bank balance of that business, the applicant. And if we see that they have $200 or $300 or less in their account, we probably aren't going to approve them for a business loan because they don't even have enough money to pay the first payment on the business loan back. Now, excuse me, the client's thinking, well, yeah, loan me the money and I'll have money to pay the payments. But that's not the way that the loan committee looks at it. They're going to say, man, you're insolvent. You've got next to nothing in your business account. You don't qualify for a business loan yet. So this is our way to kind of backdoor that if needed and inject money into the business's bank account. Now, it'll go in as an equity contribution from the owner into the business, which looks doubly good. So now not only does the bank have a credible, not only does the business have a credible bank account balance, also now we're able to demonstrate more of an equity contribution from the owner, which helps as well. And then thirdly, we mentioned startup cost. And this is important because while our access to capital program has no upfront cost, You and I aren't fools, right? So we know that individuals may have incidental costs to get their business compliant. Just for example, if they don't have a business bank account open, really hard to get a business loan. So they would need to go open a business bank account and have a reasonable balance. Beyond that, what are other best practices that we've learned about as far as what a small business can do? Well, they really should have a commercial address. Well, you and I can provide them a commercial address. You can monetize that, but commercial addresses aren't free. They're not expensive, but they're not free. So you can see where I'm going here is for those small businesses that are missing some credibility factors, this can be the funding for that. It's not limited to that, but it could be the funding for that. Okay, so I'm going to go on through my bullets here, and then we're going to open it up for questions, comments, concerns. But feel free to type them into the Q&A whenever you'd like here on the chat box. Okay, so we're going to go through benefits, the 3 C's, and then how clients can access. And we'll also make sure you understand how you get paid, how you monetize this as well, but we'll get to that in a minute. All right, so what are the benefits to the client? Not what the benefits are to you, but what are the benefits to the client? Number one, we're really accomplishing 2 goals at one time. We're going to help them boost their credit and also create liquidity in a simple, easy, and fast package. And frankly, that's what society wants, right? Simple, easy, and fast. And I'll give you more details on that. So this meets those 3 criteria. What's very unusual, while this is a true legitimate installment loan, there's no hard inquiry. And that's important, right? You and I both know that if we have too many hard inquiries, then that sets the expectation from the extender of credit that we're out shopping for credit. They don't know how many of them got approved, how many of those extensions are applications of credit, and it creates a barrier to accessing capital. So in general, we want to minimize the number of inquiries. Usually in life, though, you can't usually get an extension of credit without an inquiry. Those almost always go together. And even though you can go through and legally and ethically remove inquiries, you wouldn't want to ever remove an inquiry for a trade line that was approved. However, none of that is relevant here, so it's extraordinarily unusual and beneficial to the client. They can get this they can get this installment loan with no hard inquiry, soft pull only. Okay, next, quick approvals. Normally, we're getting approvals, and of course, we tested this before we're rolling out to everyone today, but quick approvals, normally same-day approval. Now, again, it's them doing the underwriting, and so don't come throw arrows at us if it takes 2 days, but normally it's same-day approval, very quick process. Quick funding, usually the funding is wired to them the next business day after approval. So total process, much less than a week, could very well be about 3 business days. It's set up as a installment loan. I'm jumping around here, but I probably should have reordered these. So up to a 36-month repayment term, and there's no prepayment penalties. Some of you are asking, how fast is it? And I think I just addressed that, Billy, so tell me if I didn't address fast quickly enough. And then Brian's asking how much they get approved for, and to no surprise, the approval amount will be based upon their credibility. So we're going to talk about the minimums now to even be approved. The maximum is going to be impacted by their credibility, and none of us should be surprised by that, right? The stronger we are in our 3 C's, the more access to capital we have. What are the 3 C's? Well, we've taught it before, and you should be very familiar with it. When it comes to borrowing money, just like we should have learned in school, there's credit, cash flow, and collateral. So we're going to talk about the 3 C requirements. Now, let me scroll it up a little bit. There's almost no minimum credit score. It's right around a 400 FICO. So that's great. as we look at credit scores for our clients, whether they be in credit boost, access to capital, or both, I'm going to say 99% of our clients are going to qualify for this from that C. Now, I added the little highlighted yellow, right? Because there's 3 C's. And so the underwriting criteria varies for each of the 3 C's, doesn't it? So from a credit perspective, we're in pretty darn good shape. Just about anyone's going to qualify. Cash flow, since this is oriented towards new startup businesses that don't have business cash flow yet, not limited only to that audience, but that is our target audience, we're going to have to look at the owner's cash flow, aren't we? Because we know the business hasn't cash flowed yet because it's set up for new startups. But the minimum requirements are very easy to meet. We need to demonstrate at least $1,500 a month going into our personal bank account through direct deposits. So there's a few underlying points there, right? We need to have clients that have direct deposits. You and I, we've talked about this before, how anyone can qualify for that, and I'll explain that now. For instance, we encourage no one to be self-employed. So we have all kinds of people on our call today: Anna Marie, Anthony, Barry, Beatrice, Billy, Brian, Kwong, David, DeAndre, Denise, Dion, Mark, Joseph, Josh, another Mark, Parmala, Peggy, Randall, Robert, Simone, Theo, Victor, William, Will, and others. We don't want you to be self-employed. We don't want any of your clients to be self-employed, but we all know the benefits of owning our own business. How do you move from self-employed to not self-employed? Do you remember? Set up a payroll account, a payroll service. We use QuickBooks Payroll. For us, you can use whatever you want, but then each week you're drawing a paycheck, and each week you have a paycheck stub. So now when you or me or the client goes to apply for a mortgage or apply for a loan or auto financing, whatever it is, they're no longer self-employed. They work for a company. They have paycheck stubs from a company. Now, they may own part or all of that company, but the point is they're no longer self-employed. We do not want people to be self-employed. We need to educate them and help them move from being self-employed to owning a company and drawing at least some salary from their company. Now you might say, well, Tom, that sounds really good, but what if they don't have money for QuickBooks Payroll service, which is, I think, $60 a month or something. We don't sell it, so I don't know exactly. Well, I mean, they're in pretty piss poor shape if they don't have $60 to set up a payroll account. What if they don't have enough money to pay themselves payroll? Then you hold the key to that, don't you? Bring them on as a credit literacy educator. In your hierarchy, you get overrides, they get paid. Help them do just like what you and I are doing. Help them enroll at least one client per day in the Credit Boost program. No selling involved. They're going to make about $9 grand a month. You're going to make about $3 grand a month in overrides from every person you help do that. People have to create earned income. I can't tell you how often. I was working yesterday, Sunday, on January 10th. I'm talking to this guy on the phone. It's like, woe is me. I don't have any money. I don't have any money. Well, what are you doing to earn money, right? Nothing. Well, you've got to earn money. So you either go deliver DoorDash, or you go get a job as a school bus driver, or whatever you want, or become a credit literacy educator, right? No selling involved, earn on average $9 grand a month. So sometimes you have to help people get from point A to point B. If they have no earned income, unless they just have a big treasure cove of money they're sitting on, that's their primary problem. They need earned income. To get a loan, in most cases, you need earned income. Now, it's true, some loans don't verify it, but you'd have to lie on the application, which isn't good. In this case, we need to show that we have at least $1,500 via direct deposit income. So does that rule anyone out? It shouldn't, because they've already decided for our target market, they already have a new startup business. They can set up QuickBooks Payroll and run a couple weekly payroll paychecks and start having verifiable direct deposit income. So several messages are contained in this rant. Number one, don't encourage people to be self-employed. Bad. Encourage them to own a company and become an employee of their own company. That's good. And so that's the way around this if they don't currently have direct deposit income from another source. All right, so we're talking about the 3 C's, aren't we? So we had the first C, which is credit, low, low, low criteria. Second C is cash flow, low, low, low criteria. And then we get to collateral. And what we're going to do is make sure that we've set up with them a collateral assignment. Many of you are familiar with that third C. We set up what's called a key person policy. Now it's simpler than ever. It wasn't always simple. Frankly, it was very painful for the longest time. We tried working with Nationwide Insurance, great company, smart people, good people. But in terms of getting key person policies written with Nationwide, I'd rather have a stick in the eye. It was not a good experience. So now we switched, and now we're doing the collateral assignments exclusively through a new source. Thank goodness, guaranteed approval. Everybody is approved, so we don't have to go through the underwriting shenanigans, no medical exam. We found a better model for getting these collateral assignments. If any of you are licensed life insurance agents, you need to get with me. We need to get you set up so you can help your clients with these, because this is both income producing for you, but it produces the collateral that clients can use for a variety of reasons, variety of purposes. All right, and then the third is how to access. Well, on the credit, they're going to access this by being a client in the Credit Boost program. We're going to help them get a boost in their credit score, and then you're going to get paid based upon the increase in their credit score, as you should know. And again, we're not MLM, we're not network marketing, but you earn overrides. So you can bring on other people to be credit literacy educators. They get paid and you get paid overrides. Passive income, smart thing to do. All right, so let's get to your questions that you have about the program. So Brian asked, first of all, I'm going to paraphrase this question, and it's a very astute question, but Brian is astute. He's involved with this space. He's asking essentially about the aging of their bank account, and we need 2 months. The bank account that they have their verifiable income coming through needs to be at least 2 months old. Now, I'm not saying that they have to have had 2 months of direct deposits. That's not what I'm saying. What I am saying is, what I am answering is Brian's question, which is astute, wasn't on the sheet here. What's the aging of the bank account? And the aging of the bank account needs to be 60 days. Thank you, Brian, for asking that. But we don't need 2 months of direct deposit history. All right, and then so we're getting more questions on the loans. So please, go into this eyes wide open. The amount of the loan approval is going to be based upon the credibility of the applicant, isn't it? That's the way it works. And so based upon how they look on the 3 C's, especially the top 2 C's, if I can highlight appropriately, will determine their approval. But it's always worth going after, because it adds a new trade line that builds their credit score. And that's what we're trying to do with Credit Boost. And if they're also in access to capital, it's giving them funding to be able to use as working capital or for whatever use. Okay. William asked about the 3 C's, and that's good. So what I should have said, and I'll clarify because William is asking a good question, need all 3. So these are the 3 C requirements that they need. They need to have a minimum credit score of 400 or above. Almost everybody has that. We're going to rarely run into someone that doesn't. You're going to run into sometimes people that have a real thin file with no established credit score. They'll still typically be approved. So there's almost no minimum there. There's almost no minimum cash flow. I mean, 1,500 is the equivalent of 18,000 a year. That's well below poverty. But the kicker is that they have to be having that as verifiable deposit income, not self-employment income. But we've just talked about how to legally and ethically resolve that 100% of the time. Set up QuickBooks Payroll or whatever payroll service you want to use and start cutting yourself a check every Friday, and or whatever frequency you want. I would do weekly because you create more paycheck stubs more quickly if you pay yourself weekly than monthly, right? All right, and then we covered the collateral. So let's see what other questions. So William asked about the 3 C's, and so we clarified that. Brian asked about the bank statements earlier. We talked about we need to have the bank account open at least 60 days. Now, this is still a personal bank account because this is, again, designed for early stage entrepreneurs that their business isn't ready yet for funding. So we're going to be often using this for clients that are in access to capital to get them an interim round. We call interim funding, an interim round of funding. We can start doing this now even before they've completed the 28-day, the 4-week process. So for those clients that come in and they're looking for some funding right away, even before they finish the 4 weeks, before they finish the 4 modules, before they finish the 28 days, before the loan package is created, now we can hop on this quickly. This addresses a huge request by many clients, which is I need some interim financing right away. This is a big deal, big deal. Okay, so I think we answered your questions. So let's turn back around and talk about how to implement this. How do we implement? You don't promote, I wouldn't recommend promoting this as a standalone offering. This is a trade line that's available for clients that are in the Credit Boost program, all right? So this is educational for you to know that we're adding additional trade lines for Credit Boost clients. Last month, we added the $10,000 revolving account. This month, now we're adding the new startup financing program. With that being said, there's no maximum number of inquiries. They can be declined from other sources. It's okay. It's okay. There's going to be very few reasons why they don't get approved from a credit perspective. Very relaxed. This is a special program to really make getting access to capital easier. It was oriented towards minority-owned small businesses, but it's not limited to that. So we won't talk about specific gender or racial target audiences. Anyone can qualify by meeting these criteria. Okay, so in terms of what this means to you as a distribution partner, make sure that you're set up as a credit literacy educator. Make sure that you have a landing page, and we'll provide you the marketing flyer as well. Go spread the word about Credit Boost. No upfront cost program. We average 100-point score increase in just the first 30 to 60 days, not by doing credit repair, but by adding new positive credit. That's what Credit Boost does, is we add new positive credit. And so from your perspective, how do you monetize that? Well, you're paid based upon the credit score increase of the clients that you've referred in. And so you're going to get $3 to $5 per point increase. The average client has a 100-point increase within 30 to 60 days. Therefore, you're going to make $300 to $500 per client with no selling involved. I don't think everyone is assimilating how incredible that is. You don't have to sell anything to anyone. We provide you the landing page. You educate, you get the word out, you drive people into the landing page. We take it from there, and you're going to earn on average $300 to $500. The goal is to help one person a day. There's on average 30 days in the month. So even at the lower end, 300 times 30, that's $9,000 of side income with no selling by just referring in one client a day that of course converts and gets enrolled. I don't know that you're going to find a better side gig than that. Some of you are freaking power players. Going back to Brian, who asked questions earlier, he referred in, I think this is correct, 38 clients on January 6th. Don't hold me to it, but I believe that's a correct number. 38 clients, I think, he referred in one day on January 6th. You know, Brian made more in one day than the average American does in a week. Well, most people don't make 19,000 in a month, right? So it's the real deal. You hold the ticket to help people not only improve their credit, which is our core message here with Credit Boost, but you hold the ticket to helping people have the money to pay their bills, to have the funding necessary to start and grow a business. It's a big deal. Okay, so let's see if we have any other questions that's relevant to the new startup financing program, which is a trade line under Credit Boost. So what you're going to do, of course, is become a credit literacy educator. Most of you already are. You'll have your landing page. You'll drive people into that. We'll take care of the rest. We'll take care of the rest. Now, if you are a licensed life insurance agent, get with us because we need to get you set up here so you're able to write the key person policy that serves as the collateral, right? Because there's 3 C's in lending: credit, cash flow, collateral, and we're going to work together to set up their collateral. It's cheap, it's quick, it's easy for them, and you earn income by helping them set up their collateral assignment. This is the golden ticket for licensed insurance agents. And ironically, you won't even believe this, but it's true. You do not have to be a licensed life insurance agent to even sell this key person policy. It's a hybrid. You've never seen anything like it. But okay, so let's see what other questions anyone has. Barry says we'll be on fire with this product. I agree, but keep in mind, I wouldn't market it as a product. I'd be driving people into Credit Boost, and then this is just another trade line that we can help them with once they're in Credit Boost. No, there's not going to be like a new website page or a new landing page or new links for this. This is a resource under Credit Boost. Just like we added the 10,000 revolving last month, we're adding now the new startup financing program. But I agree, Barry. If each of you cannot generate at least one Credit Boost client a day over a 30-day period, shame on you and shame on us, because there's so many people that need capital. There's so many people that need better credit. And this is giving it to them. This is exactly what the marketplace wants. Thank you, Barry. I agree. Yeah, yes, and Anna Marie's asking a good question. This is a primary trade line, which means it's real. It's money that's sent into their account for the installment loan, and they can use this money for whatever they like. This is real. This isn't just buying a trade line that says they have an installment loan. It's really an installment loan. That's why there's a repayment process. That's why it's funded. You know, it's the real deal. It's a primary trade line. It's beautiful, beautiful. Oh my gosh, Billy, you're asking me how much does it cost the client? Well, of course, they're going to have to pay the loan back. That's the way loans work. And then you're asking how you get paid. And I've expressed that, I think. The point is they're going to get paid. You're going to get paid if they're in Credit Boost based upon the impact of their credit profile. And if they're also in access to capital, then you're also going to be paid a % of the capital raised, right? So let's say for every $100 of startup financing they get, Billy, you're a joint venture incubator partner. You're getting 3%. So for every $100 cash raise, Billy, you're getting paid $3. So for every 1,000, you're getting $30 and so forth. And so it's actually a better question now I think about it, Billy, is if they're both in credit boost, which they have to be to access this, and also access to capital, then technically, Billy, you're generating two revenue streams for yourself, one off the capital raise and the other off of the credit score increase. And Brian's asking, yes, so this is a key person policy that we'll be setting up. We have a special setup now whereby it's guaranteed approval. What we tried before with key person policies was just a beating with people having to get their blood pressure checked and getting their doing drug, peeing in a cup and getting drug screens, and some of them had to have EKGs, and some of them had to have their medical records pulled. Brian, it was terrible. It was terrible. It was taking forever. No one liked it. It took forever to get paid. It took forever to process people. We're not doing that anymore. That is just a freaking pain in the butt. So now we've got a new resource for the collateral assignments, guaranteed approval. I'm a cancer survivor, right? Guaranteed approval. You could be in the hospital, recovering from a heart attack, guaranteed approval. And there's no medical exam. All right, so, and this does have return of premium, Brian's asking. Yeah, so when we set up the new collateral assignments, depending upon the person's underwriting, in many cases, they can get return of premium. So I got my policy yesterday, and I have return of premium. So you can't beat return of premium, right? Because you either die and the policy pays out, which sucks for you, but it helps everyone on the other side of the transaction, or you live and you get your eligible premiums back. ROP, return of premium, strong, strong, strong. Robert's asking, what's Brian's method? Brian is just a freaking good marketer. He's out aggressively marketing, doing those things that we talked about. How do we generate credit boost clients? We've had a training on that. You can look on the website, but he's active. All right, let's see. Yeah, and so I can visit with any of you individually with specific questions you have, and any of you that are life insurance licensed that want to write these key person policies for the credit boost clients, I can assist you with that. Again, it's affordable policies, so you're not going to make thousands and thousands of dollars. But it is a permanent policy. It's not term. And Brian says email list help. He has email list. Okay, so we bounced across the board a little bit, but let's wrap this up now. So excited to announce a new type of trade line that's available for credit boost clients. It's entitled New Startup Financing Program. We've outlined the benefits. We've outlined the 3C requirements, and we've told you how they would access. People that are already in credit boost will be introducing this automatically. If you want to use this as a carrot to attract more people to credit boost, that's fine. But just realize they don't come sign up for this. They come sign up for credit boost, and then they have access to this. All right. So thanks everyone for your time today. We will not have the 10 o'clock Central webinar because I'll be traveling, but we'll be back tomorrow morning. If you have any individual questions, just get us an email. We'll address those. Thank you for your time, and let's go get after it. One a day is all we're looking for, right? One a day. Have a good day. Bye-bye.